Welcome everyone to another episode of Unpacking Transfer Pricing series, where we aim to demystify complex transfer pricing concepts for our listeners who are interested in transfer pricing. Today, we will broadly discuss Chapter 5, Documentation Requirement of the OECD Transfer Pricing Guidelines issued in 2022. Our goal today is to give you a high-level understanding of transfer pricing. This isn't professional advice, and for specific situations, one should always reach out to actual transfer pricing consultants. Think of this as your foundational knowledge builder. A link to a detailed audio-only description is available in the comment section below. So, let's begin. Chapter 5 of the Organization for Economic Cooperation and Development Transfer Pricing Guidelines outlines a three-tiered documentation approach. The master file provides a group-wide overview of business operations and transfer pricing policies. The local file details specific intercompany transactions. The country-by-country report offers a global allocation of income, taxes, and economic activity indicators, ensuring compliance and transparency. Chapter 5 of the Organization for Economic Cooperation and Development Transfer Pricing Guidelines has evolved significantly since 1995. Initially focused on reasonableness and cooperation, it now addresses the increased complexity of international trade. The current standardized three-tiered approach, master file, local file, and country-by-country report, provides clear documentation requirements, balancing tax administration needs with taxpayer compliance. Since 1995, transfer pricing documentation has evolved due to global trade changes and tax scrutiny. Initially, Chapter 5 emphasized cooperation without specific documentation lists. Post-1995, increased trade complexity led to higher compliance costs and insufficient documentation. Currently, a standardized three-tiered approach addresses these challenges, balancing tax administration needs with taxpayer compliance through clear documentation requirements. Transfer pricing documentation aims to ensure taxpayer compliance by encouraging appropriate pricing and income reporting between associated enterprises. It supports risk assessment by equipping tax administrations with necessary information for identifying potential issues. Additionally, it aids audit support by providing data for thorough examination of controlled transactions, ensuring effective enforcement of transfer pricing rules. The three-tiered documentation approach standardizes transfer pricing documentation, balancing tax administration needs with taxpayer compliance. It includes the master file, offering a multinational enterprise group's business overview, the local file, detailing specific intercompany transactions, and the country-by-country report, providing jurisdiction-wide income and tax data. This structure enhances risk assessment and audit consistency. The master file offers a comprehensive overview of the multinational enterprise group's global operations and transfer pricing policies. It includes the organizational structure, business description, intangibles, intercompany financial activities, and financial and tax positions. This document aids tax administrations in assessing transfer pricing risks by contextualizing the multinational enterprise group's practices within their global economic, legal, and financial framework. The local file delves into specific intercompany transactions, providing detailed analysis crucial for a jurisdiction's tax system. It supplements the master file by focusing on transaction specifics and connects to the country-by-country report through global transaction analysis. Key elements include financial data, comparability analysis, transfer pricing methods, and materiality assessment, ensuring compliance with the arm's length principle. The country-by-country report, CBCR, provides aggregate tax jurisdiction-wide data on income allocation, taxes paid, and economic activity indicators for multinational enterprise (MNE) groups. It includes a list of all constituent entities, their tax jurisdictions, and main business activities. While useful for high-level risk assessments, it is not a substitute for detailed transfer pricing analysis. Contemporaneous documentation requires taxpayers to determine transfer prices using the arm's length principle based on available information at transaction time. Documentation should be prepared by the tax return filing date. Tax administrations must balance documentation requests with taxpayer burdens, ensuring costs are not disproportionately high. Clear expectations should be set, considering taxpayer resources and compliance burdens. Establishing appropriate timeframes for transfer pricing documentation is essential. Local files should be finalized by the tax return filing date, focusing on specific intercompany transactions. Master files require review by the tax return due date, providing a global overview. Country-by-country reports must be completed within a year after fiscal year end, ensuring consistency and clarity in compliance. Materiality thresholds in transfer pricing documentation help manage compliance burdens. Not all intercompany transactions require full documentation. Considerations include the local economy's size, the multinational enterprise group's significance, and local entity's nature. Measurement can be relative or absolute. Simplification measures for small and medium-sized enterprises exist, but they must disclose material cross-border transactions when requested. Objective, commercially understood standards are best practice. Tax administrations should ensure documentation is current without overburdening taxpayers. Documents must be retained for a reasonable period, considering domestic laws and potential future inquiries. Taxpayers choose storage formats, but information must be accessible in local forms. Annual reviews of master and local files are essential, with comparables updated every 3 years for accuracy. Many jurisdictions employ penalty regimes and compliance incentives to ensure effective transfer pricing documentation. Penalties may include fixed amounts or percentages of tax understatement. Jurisdictional variations influence compliance practices. Exemptions exist if documentation meets requirements, with lower penalties for timely submissions. Adequate documentation can shift the burden of proof to tax administrations, encouraging compliance. Confidentiality in transfer pricing is crucial for maintaining process integrity and taxpayer cooperation. Tax administrations must protect sensitive information, including trade and scientific secrets, to ensure taxpayer trust. Even in public court proceedings, efforts should be made to maintain confidentiality. The 2020 Confidentiality and Information Security Management Toolkit guides jurisdictions in safeguarding taxpayer information. The country-by-country reporting implementation framework began on the 1st of January 2016, with the first filing deadline on the 31st of December 2017. Multinational enterprises with fiscal years ending after this date must file. A revenue threshold of €750 million exempts smaller groups, covering 85 to 90% of multinational enterprises. Automatic exchange is the primary mechanism, with local filing as a backup. Effective exchange of country-by-country reports hinges on 3 key conditions: confidentiality, consistency, and appropriate use. Jurisdictions must ensure legal protections for confidentiality, adopt a standard template for reporting, and use the reports for assessing transfer pricing risks without making income allocation adjustments. These conditions ensure the integrity and utility of the country-by-country reporting process. Annex 4 to Chapter 5 outlines the implementation package for exchanging country-by-country reports. Jurisdictions must introduce domestic legislation based on the provided model, expand international agreements, and monitor implementation. Model legislation mandates multinational enterprises' ultimate parent entities to file reports, while implementing arrangements ensure automatic exchange under existing agreements with confidentiality protections equivalent to international standards. Hope this was informative, and hope to see you around in the next episode of Unpacking Transfer Pricing.